What's up, everyone? It's Karthik with MoneyVest. So get ready for the earnings of Advanced Micro Devices, Google, Visa. There's just going to be a lot of companies reporting their numbers today after the bell. We're going to be listening in to the earnings call for Google. I think that's going to be the more important one because it's a much bigger market cap company. And Google here is pushing up over 2% prior to the earnings, back up to over $171. And we got AMD also pushing up very nicely. This is the 5-minute chart. It's just been ripping higher, back up to 167, up over 4.4%. So we got lots of earnings to watch here after the bell. And we've also got Visa, which I'm also going to include on one of these charts. So Visa right now, it is selling off a little bit over 72 basis points. Of course, Advanced Micro Devices, very strong. And Google also incredibly strong here, up almost 2% on the day. So we've also got stocks like Chipotle that are reporting after the bell, as well as First Solar, Snapchat, and Reddit. So those are also companies that are reporting after the bell. We're going to put Snapchat over here. I'm just going to fix the colors here to make them more like what we have on the chart, just very quickly. So boom, borders are going to be white, or no, the wicks are going to be white. So let me just do that here very quickly. And yes, we are all set. We also pushed out our very own shopping list on the MoneyVest platform. So that's also available to everyone on the website. So MoneyVest website, we also got the shopping list now available to everyone. But these are the 4 stocks that we're watching right now. QQQ's crushing it, new all-time high at well over $501 per share. So very strong move to the upside. S&P 500 is up another 30 basis points, with Nvidia up over 1%. Tesla's been struggling a little bit, so down about 1.3%. And if you come over to Magnificent 7, everything is green except for Tesla here. And Meta, of course, is up 2.5%, with of course Google pushing up over 2% on the day. So earnings call for Google starts in about 42 minutes. The numbers are coming out in about 13 minutes. The numbers come out in 13 minutes. The earnings call begins in 42 minutes. And for Advanced Micro Devices, the earnings call starts in about an hour. So Google is going to be starting their earnings call at 4:30 p.m. Eastern or 1:30 p.m. Pacific, so 30 minutes after the markets close. And AMD is actually going to start their earnings an hour after the earnings release. In other words, after the markets close, that's going to be an hour after the earnings release here. So there you go. This is as of second quarter 2024, and the most latest information is going to be published here fairly soon. And I am, very excited about AMD and Google. So really both companies, but more about Advanced Micro Devices because it's really just been, trading sideways. It's not really kept up with the likes of Nvidia. And if you take a look at the broader pattern here, this is the main chart. This is also the 4-way. We just come over here. So Advanced Micro Devices, it has been very much sideways, right? So it's trading at the same level as it was back in January of 24. So on a year-to-date basis, AMD hasn't really gone anywhere. Year-to-date is only up 16%. So yes, 4:15 is when the report comes out, and then 5 p.m. is when the earnings call begins. So I was referring to the earnings, 4:30 p.m. for Google, 5 p.m. for AMD, and again, 5 to 10 minutes after the markets close is when we're going to get the earnings report from these companies. So let's just do some polls, shall we? Let's do it. Let's just do some polls. See what everyone is thinking about which stock should we really go after, right? This is what it's going to be like. It's now going to be some big hitters every day. So we're going to have to pick and choose like we did this morning between PayPal and SoFi. So let's just do it for Google. Google here after earnings, rally or crash. Let's just do that. And very quickly, I'm going to go over some expectations. Revenue-wise, Google is expected to just under $89 billion in revenue with an EPS of about $1.90 per share. Visa, we're expecting $9.6 billion in revenue with just about $2.63 in earnings per share. Advanced Micro Devices, we're looking at $6.7 billion in revenue and just over 92 cents in earnings per share. So those are the three big ones. Chipotle, 25 cents in earnings per share, just a little bit over $2.85 billion in revenue. And then finally, if you scroll down a little bit further, we've got Snapchat, $1.38 billion in revenue, 5 cents in earnings per share. And then Reddit is going to be negative 8 cents per share with about revenue expected at $317 million. So Jeremy, I was able to close out my SoFi calls for 88% profit this morning. Thanks, Caddy. Yes, so that's perfect. Very, very excited to hear that, Jeremy. And I'm also going to be looking at closing my calls here very soon on SoFi after the fact that it's been selling off even after a very strong beat on the day. So if you scroll down further, you'll see that SoFi all the way down here, beat on revenue, beat on EPS, 5 cents in earnings per share, revenue coming in $689 million. So both very strong beats, raising guidance, and yet the stock, of course, was selling off. And I was able to pick up the shares at $10, sent out the alerts. I think it was very, very oversold at those prices, and it has already recovered back up to 1044. Still down 6% on the day, but of course, nice little recovery here on the day, back up to 1044. So here we go. Here we go. This is it. This is the big guns. This is like, you know, Google alone, valued at over $2 trillion, is going to be a very, very important stock for the market. It's really going to be, you know, in the top 5. When you're talking about market concentration, let's come down here. If you exclude for, let's say, Tesla, because it's not really a $1 trillion company, it is really coming down to these 6 stocks, right? Which is well in the $1 trillion range. And when you exclude for, I think Amazon might still be, or actually it's Meta. I think Meta might still be below the $2 trillion mark. I think it's 1.5 or something. 1.5 exactly to the T. 1.5 trillion is the market cap for Meta. Amazon, of course, belongs to the $2 trillion club, sitting at just over 2 trillion. Google belongs to it. Of course, we got the big 3, Microsoft, Apple, Nvidia. And so when we talk about just these 5 companies, right, collectively, for them, we are talking well over $14 trillion in market cap, which is insane if you think about it, right? So that's a lot of market cap, and Google alone is over 2 trillion. So this is it. This is one of the big ones for the day. So, and again, a lot of the business model has been changing for Google, as we are already aware. They've been kind of shifting away from more organic post to very much, you know, towards a sponsored post. And that's obviously been, from a social standpoint, from a sentiment standpoint, not the best news. But of course, Google is making more money than ever before from these monetization practices, from advertising, from search, from YouTube. And so, again, it's expecting a blowout quarter for the company with, again, $1.84 in EPS, revenue sitting at just over $86 billion in revenue. So welcome on board, everyone. Thank you so much for joining. We got the earnings coming out in, well, the market's closing in about 7 minutes, earnings in more than 10 minutes. So make sure that you drop a like, subscribe to the channel, and do me a favor and share this live stream so we can have more and more people join us for this market close. Usually we don't do a lot of these market close live streams, but we mostly do them during the earnings season. So copy that link, paste it, other Discord groups, WhatsApp channels, Facebook, whatever, share with friends, family, other traders, investors that you know that are investing in Google, AMD, Snapchat, Visa, all these companies that are reporting. Spread the word so we can have more and more people join us for the earnings reports as well as the actual earnings call. We're going to be listening in to Google today, Sundar Pichai and his management team, and what they have for us in terms of guidance, as they are one of the top 5 companies, publicly traded companies in the world worth well over $2 trillion. So here we go. It's going to be just a few more minutes until markets close. Markets, of course, have been very strong. And while we're waiting, just going over some economic data as well. So if you come over to the market calendar, go over to economic calendar, kind of remove for some low and medium impact items, you'll notice that we did have the JOLTS numbers come out today. So 7.44 million. That was the actual number, job openings wise. And this number has been coming down. So that's actually, you could argue, it's a good thing and a bad thing at the same time. Bad for the economy, good for the market. And the reason being is because, a lower jobs opening number is going to reduce that ratio of job openings versus unemployed persons. And the lower that number comes down to, the worse the labor market is. And that's going to influence the Fed to very much continue to lower interest rates in support of the economy. So the fact that we came in so far below expectations, 7.44 million versus 7.99 million, that was the expectation. So we're off by about 500,000 jobs there. On the JOLTS job openings, that is a big miss, right? And it's not the best news for the economy, but of course, pretty good news for the market. which is, again, one of the very stronger reasons that we're pushing higher very, very much on the day, with VUG also hitting a new all-time high to over 396, almost 397. So Visa had a massive sell-off at one point during the day. Some whale dumped. I would have really liked Google to stay at 166, so a beat would push, a momentum would carry forward. Yeah, we're sitting at 171 right now, so 1.5% to the upside. We're seeing a little bit of a rug pull towards the last 5 minutes as Google's starting to drop off. So is AMD. And Visa still very, very weak here on the day. So, obviously sold off quite aggressively. Also, I think probably this is what you're talking about. A big dump coming from 285 down to 281, so a little bit over 1.3% as volatility continues to be pretty elevated. I mean, this has been a very, very uncertain environment where markets every day continue to push new all-time highs. We are trading pretty much near all-time highs on the Nasdaq, and we've got the volatility, which is still trading pretty elevated, right? So we're sitting at just over 19.6, almost 20 levels. We were in fact well over 20 during the day. So if you take a look at where the Money Vest Index is right now, I'm sure it's going to be much higher than where we were yesterday. So we're at 3.69 still, because there's not really been a lot of change in market breadth indicators, volatility indicators, markets overall, technical levels. So it's really just been very, very flat. And at the same time, Nasdaq is really what's been pushing higher on the last couple of days here, as we've seen a lot of risk on rally. And we talked about the market rotation graph as well. This is something that I've talked about on the channel before, the relative rotation graph. And if you go over to okay, so this is going to be something else. This is more geared towards stocks here. I'm going to have to update this because, hold on. Yeah, I'm going to have to update this to show you guys in the market update, but we've talked about how there's been technology, discretionary, and communication services. They've actually been moving from the weakening, lagging quadrants more towards the leading quadrant or improving quadrant. And we got defensive, utilities, energy, some of the more risk-off sectors that have been coming down from leading down to weakening quadrants as well. So there's been a significant rotation out of those parts of the market over to technology. But take a look at this sell-off here. In the last 5 minutes, of course, the markets are going to scare everybody off a little bit here. Seeing the last minute candle here, last 5-10 minute candle here, selling off rather aggressively. But yeah, so we are ready for the earnings. A lot of companies, very, very important companies. So as I said, we got Alphabet, AMD, Chipotle, Visa, Snapchat, Reddit, First Solar, Electronic Arts, Chubb, and Stryker. Some of the main companies that are scheduled for today. Who here is excited? Is anybody trading any of these companies? Are you guys trading Google, AMD, not investing, but are you trading the earnings? Are you trading the earnings here that are going to come out? And if so, what is your position, if you don't mind sharing? Are you bullish, bearish? Are you expecting an upwards move, downwards move? What is going to get you a margin call? What is going to get you to retire? Tell us what kind of trades are placed on this big earnings day for Google and AMD. More so for those two stocks, maybe Visa. Visa's not really that volatile for the most part post earnings, and Snapchat definitely is going to be very volatile. I mean, we're talking at least a 10% move to the upside or downside. We're going to have to see, but Snapchat usually, in most cases, has almost always been incredibly volatile post earnings. So, okay, Sam is short Google. Moto says, I'm about to full port Google and AMD calls. Okay, I'm hoping to be bullish. Let's see if they have good earnings. AMD. I got puts on Triple M, 3M, Google to the moon. I'm too scared to trade on earnings. Calls on AMD. Is there anything worse for mental health than trading earnings? I don't think there is. I think you get that little anxiety pre-earnings. Unless, of course, you're trading straddles, you're selling puts, then you tend to be a little bit more net neutral. Like in most of my trades is with the options portfolio. I honestly don't even care where the earnings go. Like that's what we have with Tesla, right? Tesla earnings, I was so neutral. I've never been so neutral on any earnings. With Tesla, I was like, it doesn't matter. If it goes up, down, I'm still making money because I have both calls and I have shares. I've hedged my position. So that's kind of like the best place to be in, technically speaking, and of course from a trading standpoint. But yes, if you're buying options, then yes, it can be pretty stressful looking at the chart minute by minute after the markets close, as they just did now. So markets are officially closed, and we're just a few minutes away from Google Snapchat, Visa, Advanced Micro Devices, all these earnings to come out. So I'll let you guys know as soon as they come out. I've got them open on my other platforms, monitors, and so I'm gonna have to turn that off. So it's gonna start in about 30 minutes here. So the results are going to come out in a few minutes, and then of course the earnings call is going to start very, very soon. So I'll let you guys know as soon as the numbers come out, and usually it's the earnings correspondent on Twitter that is like super, super quick. Our data provider right now takes a few minutes to update those numbers, so we're trying to get that down to like 15 to 20 seconds, 30 seconds. Hopefully by next year we'll have that fully figured out in terms of the earnings getting updated on our platform. But yes, $89 billion in revenue, $1.90 in earnings per share. That's the expectation. Just over $9.6 billion for Visa revenue, $2.63 in earnings per share. AMD just shy of $7 billion. Earnings per share expected at 92 cents per share here. Snapchat pushing up over 73 basis points. Google is also very, very flat right now, and so is AMD. So these both stocks very flat. Visa, a little bit of a gap down about 22 basis points at the moment here, and Snapchat is the only stock that is really, really moving at the moment. So just a few more minutes. I think AMD reports at 4:15. I think Google might be 4:10. So we're just gonna have to wait a few more minutes here to see what those numbers end up looking like. In the meantime, folks, please do me a favor, share this live stream with other people so that they can also join us, listen in on the earnings call. We're going to be mostly focusing on Google's earnings since it's a bigger player. And of course, AMD is also very important. Lisa Su, I'm sure she's got a lot of guidance and insight into the chip market, semiconductors, as well as the new products. AMD also had their investor conference, I think a couple of weeks ago, which I also shared on the Discord, the entire live stream. So that's also going to be very important. But of course, we can only really pick one for today. So all of the 200 votes that we have, there we go. Big pop on Google right now. 1.7% move to the upside for Google. And let's see if we have any of these numbers. 175, 3% move to the upside for Google here. Very, very nice move. Snapchat's also moving up. AMD is also moving up 1.5% to the upside. Here we go. Google is now a 4.5%. An incredible, incredible move. Nice little breakout for Google, getting up to 181. Sheesh, 5.2%. That is an incredible, incredible breakout here that's coming in. So, okay, Okay, let's take a look. So nothing on their website yet, but Google here sure popping right now, just absolutely crushing it. 179, 181 is the high. Snapchat also up over 2.2%, 1120, and Advanced Micro Devices up to 168 at the moment. So I don't have a horse in this race, folks, but I'm sure you guys do. Revenue came in $88.27 billion, beating expectations by over $2 billion, almost $2 billion. Google Ads revenue came in at $65.8 billion, operating income at $28 billion, exceeding expectations by over $2 billion. Ad revenue for YouTube ad revenue hitting almost $9 billion, 8.92, EPS coming in about $2.12, $2.12 versus expectations of $1.84. Huge profitability and a massive beat across the board from Google. They processed 3.5 billion searches per day, each search taking less than half a second. Cloud business, Google Cloud Services, $11.35 billion, growing strong, still not at the same levels at AWS or Microsoft Azure, but a very, very strong number coming in for Google Cloud at $11.3 billion. So just for everybody who's joining us for the first time, just a quick reminder here, Google, AMD, Visa, Snapchat, they were all supposed to report earnings. AMD we're still waiting on, but Google just reported absolutely staggering numbers, $88.27 billion, beat on revenue, $2.12 in earnings per share, beat on EPS, operating income, beating expectations by $2 billion, coming in at just over $28.5 billion, YouTube ads hitting just shy of $9 billion, and Google Cloud coming in at $11.35 billion as well. So massive move. At least initially, it was up to over $181, starting to sell off just a little bit. Snapchat's still up over 3.6%. So we can now take a look at the earnings release ourselves. So there we go. Consolidated revenue, 15% increase on a constant currency basis, $88.3 billion. Again, a very, very strong number coming in when you round up slightly. Google services revenue up 13%, to 76.5 billion. Cloud revenue increasing 35% to 11.4, and net income, which is just the bottom line, sitting at 26.3 billion, $2.12. It's becoming a profitability beast now. There's no doubt about it. I mean, it's absolutely crushing the profitability because of so many sponsored ads, right? So we've talked about this on the channel before. Absolutely crushing it when it comes to profitability there. So that was the entire sort of update on Google here. I'm going to save that. And let's move over to Advanced Micro Devices. We're going to listen in on the earnings for Google here shortly. There's going to start in about 24 minutes or so. But let's just now wait to see what AMD is going to report. Google's already out. Visa, let's just take a quick look at that as well. There's just too many earnings. Visa earnings are not out yet. I'm just going to have to wait for Visa. But Google, of course, was the big one that's already out. It popped up a little bit over 5% to 181. That's the high, and it's starting to sell off. But Visa here is now, looks like it's reporting at the moment. So we are, for Visa, it's up another 2%, getting back up to $287, starting to recoup some of those losses from the day. So let me just see quickly if the numbers are out here. Expectations for Visa were about $2.58 in earnings per share. Revenue was expected at about $9.45 billion. And looks like, yes, we do have the numbers for us. I'm going to bring them over now. Okay, so revenue came in at $9.6 billion for Visa. Expectations were 9.48, beat on revenue. EPS coming in 271 was the EPS, beat on EPS as well. 258 was the number here. So let me just see if I can bring it over very quickly for you guys so you can see. Still waiting on AMD, folks. Google's already reported. Visa is right in front of us. $9.6 billion, 12% change year over year. Non-GAAP earnings per share 271, 16% year-over-year change here. And for the full year, just over $10 in earnings per share, which brings Visa's valuation sitting at just about 28.5. It's a very simple mental math here. $285 divided by 10 bucks, 28.5 times earnings multiple, which I guess some people would argue is expensive. Some might argue it's not, but it's only really grown at 15%. So I'll let you be the judge. 28.5 times earnings based on 15% growth rate, it's trading almost twice its earnings growth rate, right? So the PEG ratio will be closer to 2 when you divide 28.5 divided by 15. $35.9 billion in revenue, 10% increase year over year. Payments volume up 8%. For the full year, also 8%. And if you scroll down a little bit to take a look any of their guidance that they've given us, because they just actually ended their entire fiscal year 24, because they operate on a different fiscal year, not the calendar year. And they're going to be hosting an Investor Day on February 20th, 2025. And let's see if we have any guidance from the company for 2025. Maybe they're going to provide that on the earnings call. But yeah, those are the surface level numbers. I'm not going to spend too much time kind of going over the details right now, because we do have other earnings to also catch up to. We have a lot of earnings. Snapchat. Let's take a quick look on whether this company reported or not. So it's already pushing up 2.3%. Reddit popping up as well. So there we go. We can't have Reddit open right now. Let's just go over here. They were actually supposed to report an earnings loss of 7 cents per share with revenues of well over 313 million. It's up over 15% right now. So yes, Reddit also absolutely crushing it, up to $93, but one earnings at a time. So let's see what Snapchat reported, and then we'll come over to Reddit, and I'll bring them over for you guys as well. Okay, so Snapchat looks like they have not yet reported, unless they were reporting for second quarter. Yep, so they haven't reported yet. Snapchat earnings have not been out yet. I mean, it's really, I feel like it's moving more on volatility there than anything else. Let's see. Yeah, I don't think Snapchat has reported yet. Unless you guys have the numbers, let me know. But I don't think they've reported yet. They're just really moving on some after hours volatility there. But Reddit, I think, did. Yes, Reddit already reported. If it's a net income, if it's an actual EPS, profit, then that would be crazy. I think that would be a well-deserved rally of 15% here for the company. But we got diluted earnings per share. No way. They actually did report a profitable quarter. That's crazy. Let me just bring that over right now. But Reddit actually reported an EPS of 16 cents per share, which was actually quite odd. Almost $30 million in net income and bottom line. So this is going to be the numbers for Reddit. Revenue came in at $348 million. Very nice growth. Very, very nice growth. And then, of course, we've got diluted earnings per share at 16 cents per share. Expectations were for negative 7 cents. And so that's a very, very strong beat, up over 13, almost 14% right now, trading up to $93. Also, don't forget, 4 minutes. I think AMD is also going to be reporting here. We've already got AMD's page opened up here. So we're going to be ready to take a look at those numbers as well. And yeah, so Reddit, strong beat on EPS, strong beat on revenue. Snapchat looks like it's finally out. Let's see what they've reported. They're selling off aggressively right now. So I'm assuming 47% growth for Reddit, by the way, on the daily active users. 97.2 million was that number. Way ahead of expectations for them as well. Okay, Snapchat also beating expectations. So not bad. Earnings per share coming in about negative 9 cents per share. Revenue was about 1.3 billion, which was 1.37 billion if you're really just kind of going precise there, and 1.36 for the expected numbers. Beat on both revenue and earnings per share for the company. But Snapchat, figure out a way to become profitable, man. It's been way too long. Even Palantir's profitable now. What's taking you guys so long? Snapchat, I feel like everybody uses it, but it's just an app that never seems to be profitable. I don't know what the heck is going on there. They never seem to figure out profitability. But down about 3.5% right now. So Snapchat double beat down on the earnings. Visa, we already went over. Strong beats on EPS and revenue, I feel. And of course, pushing up 1.7%. AMD still waiting. We're still waiting on AMD right now. First Solar, thank you, Andy, for mentioning that. Again, folks, thank you so much for joining. Make sure that you drop a like and subscribe to the channel. We're covering as many earnings as possible. I'm trying to bring you guys pretty much entire roundtable of Visa. We covered Google, we covered Snapchat, and we covered Visa as well, and Reddit as well. A few earnings that we're waiting on is going to be Advanced Micro Devices. Chipotle, I know you guys, some of you guys are very interested in Chipotle. It is right now down 5.7%. We'll take a look at Chipotle as well. I just really want to focus on Advanced Micro Devices right now. So Vault, yes, that's great. Good for you. When it comes to Google, I'm glad about this, but still your thesis analysis and a couple more I saw on YouTube got me thinking I might sell Google pretty soon. Yeah, so I mean, look, for me, it was a small position anyway, and I do have a lot of exposure to Google on my VUG ETF, and I just really wanted to dollar cost average into maybe something else. So again, it really depends on, your personal thesis and your analysis. Google with a very strong beat, so no doubt about it, coming in with staggering numbers. I knew the initial burst of this huge monetization is going to be very, very strong because of how abundantly crazy Google is becoming with their sponsored ads and everything else. But whether that's going to be longer lasting, I think that's the real debate. That's the real question that we have to ask ourselves, is that whether that's going to be something that is going to be longer lasting, right? Because of everything that's also available in terms of search. So that's the real question. And look, of course, I don't expect anyone to follow me along on any trades. I would much rather have you guys do your own due diligence and research and analysis to better figure out whether it makes sense to buy, sell, hold, or whatever. But yes, so very good, Vault. Congratulations on a very strong earnings result. Visa, 2% to the upside. AMD, I think it's going to be about a minute here, 30 seconds or so. We're still waiting, and we'll see what those numbers look like. And we're still also getting ready for Google's earnings call. Starts at 1:30 p.m. Pacific, or about 4:30 p.m. Eastern. So we're waiting on that as well. We got about 15 more minutes left to break down AMD and Chipotle. Google, by the way, pushing back higher, 4.5% to the upside, 178.86. Snapchat's up 4.5%, back up to 5% now, 11.50. Finally, some buyers starting to step in for Snapchat. And Visa also pushing up over 2% right now, $288. So let's see if AMD has anything for us. Let's see if AMD has anything for us right now. Starting to roll over after a very strong day. It was up 4%. 4%. So we'll see if AMD has any earnings. Okay, so starting to sell off, down over 2%. 2%, a little bit over 2% right now for Advanced Micro Devices. Let's see, latest financials, Q3. Come on. No, we don't have it still. Q4. Still Q4. No, Q2 2024 still. Down over 3% now. So 3%. Going once, going twice, 3%, 3%. There we go. So we have them out. Beat on EPS and revenue. So we've got earnings per share about 92 cents. It's actually matching expectations. And we got revenues coming in at $6.8 billion in revenue. Man, Luca, you and I are like literally just like on point. It's like, yeah, so match on both revenue, EPS. So that's going to be for Advanced Micro Devices. Selling off a little bit over 4%, kind of pretty much gave up all those gains from the day. But we'll see. We'll see if it gets bought up here, similar to what Google did, kind of pushed higher, sold off, and then it's now starting to get bought back here as the market sort of starts to digest some of those numbers. Let's see. Yep, so we still don't have anything here on the latest information, latest financials, nothing yet. Historical financials. Yep, nothing yet. We're just waiting on Google, on AMD's official investor relations page. But yes, matching expectations on EPS, beat on revenue for the company as well. Data center is going to be huge. I think that's really going to be the key point for AMD. What kind of growth there's going to be for Advanced Micro Devices. Let's see if the Google call has started or not. Not yet. So they're still showing off their phones, their Pixel. But yes, AMD's out. Every earnings is pretty much out at this point. I don't think we're waiting for anything right now. Reddit's out, Snapchat, Visa, AMD, Google, Chipotle. I think everything is pretty much out at this point for earnings. So let's see if I can gather up more information. So robust Q3 2024 financial performance, achieving a record revenue of $6.8 billion, up 18% year over year, driven by strong demand in EPYC and Instinct data center products. In the Ryzen PC processors, GAAP results show gross margins of 50%. Operating income $724 million, up 223%. With EPS of 47 cents, that's on a GAAP basis. Non-GAAP results reveal a gross margin of 54%. EPS of 92 cents, matching expectations. Operating income at 1.7 billion. Data center up 122% for AMD. That's, again, a very strong number there. $3.5 billion. I think that's a record for the company in terms of a quarterly data center revenue. Client segment reached 1.9 billion, up 29% here for the business. And gaming revenue fell 69%. Gaming, 69% drop here. Due to a decrease in semi-custom sales, embedded revenue dropped 25%. And AMD's AI strategy included new partnerships, launches in the AI-driven CPUs, GPUs, and networking solutions, and the acquisition of ZT Systems to bolster data center AI capabilities as well. Company expects Q4 2024 revenue, so pretty much to finish off the year, $7.5 billion, plus minus $300 million, reflecting 22% year-on-year growth, anticipating non-GAAP gross margins at 54%. I think they might have missed on the guidance there. I'm not too sure. Let's just check. So there you go. There we have the entire numbers. So revenue, as mentioned earlier, $6.8 billion. Net income, $771 million. These are GAAP numbers, 47 cents per share, up 194% year on year. Actually, that's a quarter-over-quarter number. Year-over-year, up 161%. Non-GAAP numbers, 92 cents, matching expectations. Revenue still same, 6.8 billion, up 17%. And let's see, when it comes to the guidance from the business, current outlook, 7.5 billion. I think that might have come in some short of expectations here. That's going to be a year-over-year growth of 22% on the mid-year range and non-GAAP margins of 54% here. So AMD, one of the big losers here on the earnings. Out of the four stocks we had on the screen, AMD had to ruin the party for everybody here. Down a little bit over 6%. Google is still up 3%. Snapchat's up 8% now. That's an incredible move. And we got Visa up over 2.5%. Chipotle is also down. Chipotle and AMD. ruining the party here. Reddit's doing its part, up 17% right now. Absolutely incredible. $96 is where it's at. So we're just gonna get ready for the earnings here. So just waiting. As soon as this begins, we'll listen in on the earnings call. But that was all the earnings, folks. Yes, SMCI, First Solar. I guess we can plug those values in here as well. SMCI down about 1%. Were they supposed to report? I don't think they were. First Solar was, I know that, down over 8%. But I don't think SMCI is reporting today. I think they might be later. Yeah, so they're on Monday. They're on Monday, November 4th. Let's see, what do we have on our platform here for next week? November 4th. I pretty much, I remember seeing them maybe this week. I've seen them somewhere. Yeah, it's not showing up on this week here. Let's just check out next week. Yeah, there we go. So Monday after the bell, that's when they're reporting. That's going to be November 4th. So Monday, November 4th is when SMCI reports. It's going to be next week. First Solar did report. Yes, First Solar came out with those numbers. And it's down 8%. Very similar to what we also saw for Enphase Energy. But there you go, folks. All in all, I think we had an earnings release that mostly beat expectations on earnings. Revenue was also a beat except for few companies that came in shy of what their expectations were. And overall, I think guidance for AMD might have been one of the reasons why it sold off a little bit. But all in all, there's only two stocks, well, three, AMD, Chipotle, and First Solar, that are down anywhere from 6 to 8%. And we've got most companies like Google up over 3.8. Snapchat's up the most. Well, Reddit is up the most than Snapchat, up 6%. Visa's up 2%. And of course, the big winner, Reddit, up 20%, coming in with a profitable quarter, blindsiding everyone out there. 7 cents in earnings per share expected in terms of net losses. And what do? They reported over 20 cents in earnings per share. Absolutely incredible numbers. We can spend some more time, 16 cents, by the way. We can spend some more time kind of digging deep into these numbers. But we also have the Google earnings call starting. So we're going to have to do that. We're going to have to switch gears there. But daily active users globally, 97.2 million. Honestly, Reddit is such an interesting platform. It is not like Twitter. It is not like any other social media platform, but there are so many sub niches that are so amazing for Reddit that you can actually really find your curated interest. I've been using Reddit for football, for trading. I mean, as we know, the Wall Street Bets pretty much lives on Reddit. And so it's always, it's an interesting community feel for a lot of these niches. But I've always been kind of curious about their advertising model, because with any text-based social media, it's very difficult to advertise. It's in some ways very similar to Twitter, because it is a text-based platform at the end of the day. It's not like a video platform. It's not an image platform. It is a text-based platform. But 97.2 million daily active users is a huge increase, 47% increase year on year. International to 49 million, that's 44% growth, and US alone, 51% growth to 48.2 million. And then we had average revenue per user, so ARPUs, 358 globally. That's up 14% year on year, and US up 12%, 588, and we got international from $1.14 to $1.32. That's up 16% year on year. So I think these are very strong numbers for Reddit. But the question then again becomes like, how sustainable is it, right? Is it more like Meta, or is it more like Snapchat? Because those are two very different companies, right? Meta is a profitability beast. It's a free cash flow revenue cow. And Snapchat, on the other hand, is just struggling to find a way to become profitable. But of course, earnings still coming in better than what the expectations were. And of course, the stock popped. Okay, so that's where we are with all the earnings. We're just about getting ready here for the earnings call. By the way, 428 votes, and 76% of you guys said Google is going to rally after earnings, and you guys were absolutely correct. Congratulations on your Google call. So, kind of rubbing it in my face, are we? No, I'm super happy for you guys. I didn't really have any horses in the race today. I wasn't trading anything. Of course, AMD, VUG, Google are part of the portfolio, but other than that, no specific stock that was I was trading anything. Holding since 2022. I remember watching Arthur's video during the bear market 2022 live streams, and I was buying Google at that time. It was like throwing money into a fire pit. Yes, it was pretty brutal time in 2022. It was definitely very, very brutal in terms of the actual, that entire environment. 2022 was not a good time to be long. It was just markets kept on selling off. There was so much selling pressure. So Matthews, SMCI reports next week. So we'll cover those earnings on Monday, November 4th. Maybe over the weekend, I'll talk about it briefly. But other than that, right now, we're just a little bit too focused on Google, AMD, Snapchat, Visa, and some of these other companies. SoFi got bought up very good. So, pretty much traded down to, I think, 977 was the low for the day. I sent out the alerts at $10. So $10 was my buy target on SoFi today. So, nice little increase, 4.5% back to the upside. PayPal also down 4% after earnings. I haven't had the chance to listen in to Alex Chris and PayPal's earnings. We did listen in on SoFi, but I still have to get around listening to PayPal's earnings call as well, because I think that's going to be super important. So PayPal, AMD going to have to catch up in terms of earnings call, but we'll listen in on Google. So congratulations, everyone. Absolutely crushed it. I asked you guys before the earnings came out how many people are trading it. I think a lot of you guys were buying calls. A lot of you guys were very bullish on Google, and so congratulations. Hopefully not bullish on AMD, but Google certainly paid off really well. AMD down 5%. I think it might have been the guidance miss. So gaming revenue at $462 million versus consensus 568. And embedded revenue 927 versus consensus of 912. I think the gaming revenue, a couple things that kind of stand out is the gaming revenue, of course, almost a 70% decline. And then we're looking at maybe the guidance coming in $7.5 billion. Could have been lower than what the expectations were. You know what? We can actually find that on the platform here. So fundamental analysis. Actually, I forgot that we can find out what the analyst consensus is. So on a quarterly basis for revenue, the number was for AMD at 7.7 billion. Yeah, so there you go. I think they came in a little bit shy of expectations. So on average for the fourth quarter, as you can see, for AMD for the quarter ending in December, analyst consensus was 7.7 billion. AMD guided for 7.5. So I think that might have been one of the reasons why the stock's selling off a little bit, apart from the gaming revenue decline. But yeah, I completely forgot that we have this data as well. So yes, coming in shy of what the expectations were on the guidance side for AMD. Google, I don't think they provided us with any guidance, or maybe they did. I might have missed it among all the so many earnings. I wonder what tomorrow and the day after is going to look like. I'm just going to be scrambling all over the place for so many companies. Let's see. Forecast, nope, nothing there. Let's see, Q4, nothing there. Guidance, nothing there. So yeah, I don't think we had any guidance from Google for the fourth quarter 24. They may provide us in the earnings call, but nothing there. Okay, so we're just about getting ready here. Couple more minutes for Google earnings to begin. I'm going to keep the tabs open for pretty much all the stocks. Because AMD is going to start in about 30 minutes. Google's starting now. I think Snapchat and Visa may also be later today. So I'm going to keep that open. But for the most part, we're going to be listening in to Google. So I'll do a little bit of an audio check. Yes, Stryker we'll take a look at. Clack also reports tomorrow. Yes, Clack Corporation, also another fantastic company. We've talked about it on the channel before. So we'll discuss that later. And AMD we covered. Stryker, yes. I will take a look at that as well. AMD we already covered earlier. So let's see.
Welcome everyone. Thank you for standing by for the Alphabet third quarter 2024 earnings conference call. At this time, all participants are in a listen-only mode. After the speaker presentation, there will be a question and answer session. To ask a question during this session, you will need to press star 1 on your telephone. I would now like to hand the conference over to your speaker today, Jim Friedland, Senior Director of Investor Relations. Please go ahead.
Thank you. Good afternoon, everyone, and welcome to Alphabet's third quarter 2024 earnings conference call. With us today are Sundar Pichai, Philipp Schindler, and Anat Ashkenazi. Now, I'll quickly cover the safe harbor. Some of the statements that we make today regarding our business, operations, and financial performance may be considered forward-looking. Such statements are based on current expectations and assumptions that are subject to a number of risks and uncertainties. Actual results could differ materially. Please refer to our Forms 10-K and 10-Q, including the risk factors. We undertake no obligation to update any forward-looking statement. During this call, we will present both GAAP and non-GAAP financial measures. A reconciliation of non-GAAP to GAAP measures is included in today's earnings press release, which is distributed and available to the public through our investor relations website located at abc.xyz/investor. Our comments will be on year-over-year comparisons unless we state otherwise. And now, I'll turn the call over to Sundar.
Thank you, Jim, and hello, everyone. Q3 was another great quarter. The momentum across the company is extraordinary, as you've seen in recent product launches, and as you'll hear on the call today. Our commitment to innovation, as well as a long-term focus and investment in AI, are paying off and driving success for the company and for our customers. We are uniquely positioned to lead in the era of AI because of our differentiated full-stack approach to AI innovation, and we are now seeing this operate at scale. It has three components. First, a robust AI infrastructure that includes data centers, chips, and a global fiber network. Second, world-class research teams who are advancing our work with deep technical AI research and who are also building the models that power our efforts. And third, a broad global reach through products and platforms that touch billions of people and customers around the world, creating a virtuous cycle. Let me quickly touch on each of these. We continue to invest in state-of-the-art infrastructure to support our AI efforts, from the US to Thailand to Uruguay. We are also making bold clean energy investments, including the world's first corporate agreement to purchase nuclear energy from multiple small modular reactors, which will enable up to 500 megawatts of new 24/7 carbon-free power. We are also doing important work inside our data centers to drive efficiencies, while making significant hardware and model improvements. For example, we shared that since we first began testing AI overviews, we have lowered machine costs per query significantly. In 18 months, we reduced costs by more than 90% for these queries through hardware, engineering, and technical breakthroughs, while doubling the size of our custom Gemini model. And of course, we use and offer our customers a range of AI accelerator options, including multiple classes of NVIDIA GPUs and our own custom-built TPUs. We are now on the sixth generation of TPUs, known as Trillium, and continue to drive efficiencies and better performance with them. Turning to research, our team at Google DeepMind continues to drive our leadership. Let me take a moment to congratulate Demis Hassabis and John Jumper on winning the Nobel Prize in Chemistry for their work on AlphaFold. This is an extraordinary achievement and underscores the incredible talent we have and how critical our world-leading research is to the modern AI revolution and to our future progress. Also, congratulations to Jeff Hinton, who spent over a decade here on winning the Nobel Prize in Physics. Our research teams also drive our industry-leading Gemini model capabilities, including long context understanding, multimodality, and agentive capabilities. By any measure, token volume, API calls, consumer usage, business adoption, usage of the Gemini models is in a period of dramatic growth. And our teams are actively working on performance improvements and new capabilities for our range of models. Stay tuned. And they're building out experiences where AI can see and reason about the world around you. Project Astra is a glimpse of that future. We are working to ship experiences like this as early as 2025. We then work to bring those advances to consumers and businesses. Today, all 7 of our products and platforms with more than 2 billion monthly users use Gemini models. That includes the latest product to surpass the 2 billion user milestone, Google Maps. Beyond Google's own platforms, following strong demand, we are making Gemini even more broadly available to developers. Today, we shared that Gemini is now available on GitHub Copilot, with more to come. To support our investments across these three pillars, we are organizing the company to operate with speed and agility. We recently moved the Gemini app team to Google DeepMind to speed up deployment of new models and streamline post-training work. This follows other structural changes that have unified teams in research, machine learning infrastructure, and our developer teams, as well as our security efforts and our platforms and devices team. This is all helping us move faster. For instance, it was a small dedicated team that built NotebookLM, an incredibly popular product that has so much promise. We're also using AI internally to improve our coding processes, which is boosting productivity and efficiency. Today, more than a quarter of all new code at Google is generated by AI, then reviewed and accepted by engineers. This helps our engineers do more and move faster. I'm energized by our progress and the opportunities ahead, and we continue to be laser focused on building great products. Let me turn now to the quarterly highlights. In search, recent advancements, including AI overviews, circle to search, and new features in Lens are transforming the user experience, expanding what people can search for and how they search for it. This leads to users coming to search more often for more of their information needs, driving additional search queries. Just this week, AI Overview started rolling out to more than 100 new countries and territories. It will now reach more than 1 billion users on a monthly basis. We are seeing strong engagement, which is increasing overall search usage and user satisfaction. People are asking longer and more complex questions and exploring a wider range of websites. What's particularly exciting is that this growth actually increases over time as people learn that Google can answer more of their questions. The integration of ads within AI overviews is also performing well, helping people connect with businesses as they search. Circle to Search is now available on over 150 million Android devices, with people using it to shop, translate text, and learn more about the world around them. A third of the people who have tried Circle to Search now use it weekly, a testament to its helpfulness and potential. Meanwhile, Lens is now used for over 20 billion visual searches per month. Lens is one of the fastest growing query types we see on search because of its ability to answer complex multimodal questions and help in product discovery and shopping. For all these AI features, it's just the beginning, and you'll see a rapid pace of innovation and progress here. Next, Google Cloud. I'm very pleased with our growth. This business has real momentum, and the overall opportunity is increasing as customers embrace Gen AI. We generated Q3 revenues of $11.4 billion, up 35% over last year, with operating margins of 17%. Our technology leadership and AI portfolio are helping us attract new customers, win larger deals, and drive 30% deeper product adoption with existing customers. Customers are using our products in 5 different ways. First, our AI infrastructure, which we differentiate with leading performance driven by storage, compute, and software advances, as well as leading reliability and a leading number of accelerators. Using a combination of our TPUs and GPUs, LG AI Research reduced inference processing time for its multimodal model by more than 50% and operating costs by 72%. Second, our enterprise AI platform Vertex is used to build and customize the best foundation models from Google and the industry. Gemini API calls have grown nearly 14x in a 6-month period. When Snap was looking to power more innovative experiences within their My AI chatbot, they chose Gemini's strong multimodal capabilities. Since then, Snap saw over 2.5 times as much engagement with My AI in the United States. Third, customers use our AI platform together with our data platform, BigQuery, because we analyze multimodal data no matter where it is stored with ultra-low latency access to Gemini. This enables accurate real-time decision-making for customers like Hiscox, one of the flagship syndicates in Lloyd's of London, which reduced the time it took to quote complex risks from days to minutes. These types of customer outcomes, which combine AI with data science, have led to 80% growth in BigQuery ML operations over a 6-month period. Fourth, our AI-powered cybersecurity solutions, Google Threat Intelligence and Security Operations, are helping customers like BBVA and Deloitte prevent, detect, and respond to cybersecurity threats much faster. We've seen customer adoption of our Mandiant-powered threat detection increase 4x over the last 6 quarters. Fifth, in Q3, we broadened our applications portfolio with the introduction of our new customer engagement suite. It's designed to improve the customer experience online and in mobile apps, as well as in call centers, retail stores, and more. A great example is Volkswagen of America, who's using this technology to power its new MyVW virtual assistant. In addition, the employee agents we delivered through Gemini for Google Workspace are getting superb reviews. 75% of daily users say it improves the quality of their work. Moving now to YouTube. For the first time ever, YouTube's combined ad and subscription revenue over the past 4 quarters has surpassed $50 billion. Together, YouTube TV, NFL Sunday Ticket, and YouTube Music Premium are driving subscription growth for the platform. And we are leaning into the living room experience with multi-view and a new option for creators to organize content into episodes and seasons, similar to traditional TV. At Made on YouTube, we announced that Google DeepMind's most capable model for video generation, VO, is coming to YouTube Shorts to help creators later this year. Next, platforms and devices. Gemini's deep integration is improving Android. For example, Gemini Live lets you have free-flowing conversations with Gemini. People love it. It's available on Android, including Samsung Galaxy devices. We continue to work closely with them to deliver innovations across their newest devices, with much more to come. At Made by Google, we unveiled our latest Pixel 9 series of devices featuring advanced AI models, including Gemini Nano. We have seen strong demand for these devices, and they've already received multiple awards. Turning to other bets, I want to highlight Waymo, the biggest part of our portfolio. Waymo is now a clear technical leader within the autonomous vehicle industry and creating a growing commercial opportunity. Over the years, Waymo has been infusing cutting-edge AI into its work. Now, each week, Waymo is driving more than 1 million fully autonomous miles and serves over 150,000 paid rides. The first time any AV company has reached this kind of mainstream use. Through its expanded network and operations partnership with Uber in Austin and Atlanta, plus a new multi-year partnership with Hyundai, Waymo will bring fully autonomous driving to more people and places. By developing a universal driver, Waymo has multiple paths to market. And with its 6th-generation system, Waymo has significantly reduced unit costs without compromising safety. Before I close, I'm delighted to welcome our new CFO, Anat. We are thrilled to have her on board, and you will hear from her shortly. And as always, I want to express my gratitude to our employees worldwide. Your dedication and hard work have made this another exceptional quarter for Alphabet. Now, over to you, Philip.
Thanks, Sundar, and hello, everyone. I'll start with performance for the quarter and then describe the progress we're seeing across ads, YouTube, and partnerships, highlighting the impact AI is already having on our business. Google Services delivered revenues of $76.5 billion for the quarter, up 13% year-on-year. Search and other revenues grew 12% year-on-year, led by growth in the financial services vertical due to strength in insurance, followed by retail. YouTube ads revenues grew 12% year-on-year, driven by brand, closely followed by direct response. Network revenues were down 2% year-on-year. In subscriptions, platforms, and devices, year-on-year revenues were up 28%, driven by growth in subscriptions as well as the launch of our Made by Google devices in the third quarter. Before I double-click into ads, YouTube, and partnerships, a few comments on search. Whether using their voice to find answers on the go or opening their camera to explore the world around them, people are expanding how they ask questions in search, as well as the type of questions they ask. New behaviors create new opportunities to help us connect businesses and consumers via amazing commercial experiences. As Gen AI expands what's possible, we continue to see a significant opportunity in search. Let me take a minute to explain why. AI really supercharges search. Our new AI-powered features make searches more helpful, and we continue to see great feedback, particularly from younger users. For example, with Circle to Search, where we see higher engagement from users aged 18 to 24. AI is expanding our ability to understand intent and connect it to our advertisers. This allows us to connect highly relevant users with the most helpful ad and deliver business impact to our customers. Let me share 2 new ad experiences we have rolled out alongside our popular AI-powered features in search. First, as you heard from Sundar, every month Lens is used for almost 20 billion visual searches, with 1 in 4 of these searches having commercial intent. In early October, we announced product search on Google Lens, and in testing this feature, we found that shoppers are more likely to engage with content in this new format. We're also seeing that people are turning to Lens more often to run complex multimodal queries, voicing a question or inputting text in addition to a visual. Given these new user behaviors, earlier this month, we announced the rollout of shopping ads above and alongside relevant Lens visual search results to help better connect consumers and businesses. Second, AI overviews, where we have now started showing search and shopping ads within the overview for mobile users in the US. As you remember, we've already been running ads above and below AI overviews. We're now seeing that people find ads directly within AI overviews helpful because they can quickly connect with relevant businesses, products, and services to take the next step at the exact moment they need. As I've said before, we believe AI will revolutionize every part of the marketing value chain. Let's start with creative. Advertisers now use our Gemini-powered tools to build and test a larger variety of relevant creatives at scale. Audi used our AI tools to generate multiple video, image, and text assets in different lengths and orientations out of existing long-form videos. It then fed the newly generated creatives into demand gen to drive reach, traffic, and booking to their driving experience. The campaign increased website visits by 80% and increased clicks by 2.7 times, delivering a lift in their sales. Last week, we updated image generation in Google Ads with our most advanced text-to-image model, Imagine 3, which we tuned using ads performance data from multiple industries to help customers produce high-quality imagery for their campaigns. Advertisers can now create even higher performing assets for PMax, demand gen, app, and display campaigns. Turning to media buying. AI-powered campaigns help advertisers get faster feedback on what creatives work where and redirect their media buying. Using demand gen, DoorDash tested a mix of image and video assets to drive more impact across Google and YouTube's visually immersive surfaces. They saw a 15 times higher conversion rate at a 50% more efficient cost per action when compared to video action campaigns alone. Last and most importantly, measurement. This quarter, we extended availability of our open source marketing mix model Meridian to more customers, helping to scale measurement of cross-channel budgets to drive better business outcomes. On YouTube, we remain focused on building a platform that enables creators to thrive and unlocking a whole new world of creativity with AI. Creators are at the heart of the YouTube ecosystem, and the content they are making is driving robust growth in watch time across the platform. We're also using AI to greatly improve recommendations on YouTube. Driven by Gemini, our large language models have a deeper understanding of video content and viewers' preferences. As a result, they can recommend more relevant, fresher, and personalized content to the viewer. Short-form creation continues to thrive on YouTube. Shorts monetization improved again this quarter, and we continued to significantly close the gap with in-stream video, particularly in the US and other more highly monetizing markets. Of all the channels uploading to YouTube each month, 70% are uploading shorts. And we recently announced a top requested feature, the ability to upload shorts up to 3 minutes long. Also, advertisers can now book first position on shorts blocks in close to 40 markets. We're unlocking more opportunities in the living room. Our momentum here continues as we maintain our status as the #1 streamer in the US, according to Nielsen. This is driven by the strength of our creators, such as Michelle Carr and Red and Link, who are increasingly crafting experiences designed specifically for the big screen. And it's paying off. The number of creators making the majority of their YouTube revenue on TV screens is up more than 30% year on year. YouTube is becoming a premier destination for sports watching. People come for the game and stay for the commentary and around the game content from creators like Evelyn Gonzalez, Adam W., and Brad Coleman. During the Olympics, content from Paris 2024 had over 12 billion views on YouTube. More than 850 million unique viewers watched over 40 billion minutes of content, with 35% on their TV screens. And recently, we kicked off our second season of NFL Sunday Ticket on YouTube TV, which continues to receive a positive reception from advertisers, our partners at the NFL, and fans. We've continued to invest in our product experience with improvements to multi-view and deeper integrations for fantasy football fans. Following up on my remarks from last quarter about Brandcast, we had a strong upfront performance with commitments up about 20% year on year. As always, let me wrap with the strong momentum we're seeing in partnerships. More and more of our partners are recognizing the breadth of our technologies and building solutions that leverage the very best of Google. For example, our recently announced strategic partnership with Vodafone Group spans Google Cloud, AI, Android, ads, and digital services. This multi-billion-dollar partnership will bring these technologies to more than 330 million customers across Europe and Africa. We're collaborating on more than 30 initiatives across 7 areas, including generative AI for consumers, a best-in-class TV platform, hardware, and cybersecurity. With that, a heartfelt thank you to Googlers everywhere for their extraordinary commitment, and to our customers and partners for their continued collaboration and trust. Anat, welcome to the team. It's great to have you with us. Over to you.
Thank you, Philip, and thanks, Sundar, for the words of welcome. My comments will focus on year-over-year comparisons for the third quarter, unless I state otherwise. I will start with the results at the Alphabet level, and will then cover our segment results. I'll end with high-level commentary on investment at the Alphabet level. We had another strong quarter in Q3 with robust momentum across the business. Consolidated revenue increased by 15%, or 16% in constant currency. Search remained the largest contributor to revenue growth, followed by a robust 35% growth in cloud. Total cost of revenue was $36.5 billion, up 10%. Tech was $13.7 billion, up 9%. We continue to see a revenue mix shift, with Google Search growing at double-digit levels, while network revenue, which have a much higher tech rate, declined. Other costs of revenue was $22.8 billion, up 11%, with the increase primarily driven by content acquisition costs primarily for YouTube, an increase in depreciation associated with higher level of investment in our technical infrastructure, and higher hardware costs associated with the pull forward of our Made by Google launches from the fourth to the third quarter. Total operating expenses increased 5% to $23.3 billion. The increase was primarily driven by facilities-related charges as results of action were taken to further optimize our office space footprint globally, followed by depreciation, partially offset by a year-on-year decline in charges for legal and other matters. R&D investments increased by 11%, primarily driven by increases in compensation and depreciation expenses. Sales and marketing expenses increased 5%, primarily reflecting investment in advertising and promotional efforts related to the Made by Google launches, as well as for AI and Gemini. G&A expenses declined by 10%, primarily due to lower charges for legal and other matters. Operating income increased 34% to $28.5 billion, and operating margin increased to 32%. Net income increased 34% to $26.3 billion, and earnings per share increased 37% to $2.12. We're pleased with the progress we're making in re-engineering our cost structure, which is reflected in our operating margin expansion this quarter, while also continuing to invest in the business to bring innovation to consumers, creators, and enterprises. We delivered free cash flow of $17.6 billion for the third quarter and $55.8 billion for the trailing 12 months. Year-on-year free cash flow was negatively impacted by the following items. In 2023, we deferred cash tax payments from the second and third quarter to the fourth quarter. And in Q3 2024, we made a $3 billion cash payment related to the 2017 EC shopping fine. We ended the quarter with $93 billion in cash and marketable securities. Now turning to segment results. Google Services revenue increased 13% to $76.5 billion. Google Search and other advertising revenue increased by 12% to $49.4 billion. The robust performance of Search was broad-based across verticals, led by the financial services vertical due to strength in insurance, followed by retail. YouTube advertising revenue increased 12% to $8.9 billion, driven by brand, followed by direct response advertising. As Philip mentioned, we're seeing strong momentum in YouTube, including robust growth in watch time across the platform, and are excited about the new features and products we're bringing to creators. Network advertising revenue of $7.5 billion were down 2%. In the third quarter, the year-on-year growth in all our advertising revenue lines was impacted by the increase in strength in advertising revenue in Q3 of last year, in part from APAC-based retailers. Subscription platforms and devices revenue increased 28% to $10.7 billion, reflecting growth in subscription revenues, as well as the launch of our Made by Google devices in the third quarter. We continue to have significant growth in our subscription products, driven primarily by YouTube TV and YouTube Music Premium, as well as Google One, primarily due to increases in the number of paid subscribers. With regards to platforms, we're pleased with the performance in Play, primarily driven by an increase in buyers. Google Service operating income increased by 29% to $30.9 billion, and operating margin was 40%. Turning to the Google Cloud segment, which continued to deliver very strong results this quarter. Revenue increased by 35% to $11.4 billion in the third quarter, reflecting accelerated growth in GCP across AI infrastructure, generative AI solutions, and core GCP products. Once again, GCP grew at a rate that was higher than cloud overall. We also saw strong Google Workspace growth, primarily driven by increases in average revenue per seat. As you just heard from Sundar, the robust innovation and expanded AI offerings within our cloud business are allowing existing and new customers to realize measurable business benefits, including reduced cost, greater customer engagement, faster response time, and better revenue conversion. Google Cloud operating income increased to $1.9 billion, and operating margin increased to 17%. The operating margin expansion was driven by strong revenue performance across cloud AI products, core GCP, and Workspace, as well as ongoing efficiency initiatives. As to our other bets, for the third quarter, revenue were $388 million, and operating loss was $1.1 billion. I'll highlight just a couple of accomplishments in the quarter for Waymo and Wing. We're excited about the progress we're seeing in Waymo, as Sundar mentioned, and the increase in the number of paid rides. We're planning to continue to expand our geographic coverage and reach more customers in existing markets and new markets. Wing, our drone delivery company, recently passed the one-year anniversary of scaling its partnership with Walmart in the Dallas-Fort Worth area, now operating in 11 stores and serving 26 different cities and towns. Turning to Alphabet-level activities, the largest component of this line is our investment in AI research and development activities, which support all of Alphabet. There were two notable items that impacted the operating loss in Alphabet-level activities. First, a $607 million charge related to decisions we've made to further optimize our physical footprint and office space globally. And second, our ongoing investments in AI R&D, including the full core effect of the organizational changes we've made in May to move some additional AI teams from Google Services to Google DeepMind. With respect to CapEx, our reported CapEx in the third quarter was $13 billion, reflecting investment in our technical infrastructure, with the largest component being investment in servers, followed by data centers and networking equipment. Looking ahead, we expect quarterly CapEx in the fourth quarter to be at similar levels to Q3, keeping in mind that the timing of cash payments can cause variability in quarterly reported CapEx. Our expansion of data center capacity is expected to bring economic benefits to countries and communities where we are investing. In the third quarter alone, we made announcements of over $7 billion in planned data center investments, with nearly $6 billion of that in the US. In Q3, we also returned value to shareholders in the form of $15.3 billion in share repurchases and $2.5 billion in dividend payments. Overall, we returned a total of nearly $70 billion over the trailing 12 months to shareholders. As we look forward, we're working to balance our investments in AI and other growth areas with the cost discipline needed to fund those activities. As we think about the remainder of 2024, there are a couple of dynamics to consider. In terms of revenue, year-on-year growth in advertising revenue will continue to be impacted by the increasing strength in advertising revenue in the second half of 2023, in part from APAC-based retailers. And there will be a headwind to year-over-year growth in subscription platforms and devices revenue in the fourth quarter due to the pull forward of our Made by Google launches into the third quarter this year. In terms of expenses, we'll continue to see increases in depreciation and expenses associated with higher level of investment in our technical infrastructure, partially offset by a slight benefit from the cost revenue associated with our devices due to the pull forward of hardware launches into Q3. Now, before going into Q&A, as the new CFO, I would like to share a few thoughts on how I'm approaching and thinking through growth, cost structure, and capital allocation, and expect to hear more from me on these topics in the coming quarters. As I look at the business, I see opportunities for further growth propelled by AI and the underlying momentum across the business. You heard about some of these on the call today. I also believe that we are well positioned to deliver meaningful innovation, which will translate to revenue, given our strength in the core pillars that are required to succeed in AI at scale. Realizing those opportunities and great innovation in AI requires global reach, which we have through our products and platforms, as well as continued meaningful capital investment. And while we have a strong balance sheet to be able to support these investments, we will be looking for efficiencies so that we can fund innovation in priority areas. Sundar Ruth and our leadership team started important work to re-engineer our cost structure, including efforts such as optimizing our headcount growth, our physical footprint, improving the efficiencies of our technical infrastructure, and streamlining operations across the company through the use of AI. I plan to build on these efforts, but also evaluate where we might be able to accelerate work and where we might need to pivot to free up capital for more attractive opportunities. Thank you. Sundar, Philip, and I will now take your questions.
Thank you. As a reminder, to ask a question, you will need to press star one on your telephone. To prevent any background noise, we ask that you please mute your line once your question has been stated. And our first question comes from Brian Nowak with Morgan Stanley. Your line is now open.
Thanks for taking my questions. I have a two-parter, Sundar. The first one, over the course of the last year plus, you sort of showcased a lot of different types of new Gen AI enabled search products to sort of reimagine the search experience. Can you help us hone in on one or two of these products that you're most excited about that you think over the next 2 to 3 years could really lead to more durable multi-year search growth once they scale? And then the second one, just as we're sort of thinking through constraints to how quickly they come out, what are sort of the key constraints that you see to really reimagining search and scaling it out across 2 to 3 billion people? Thanks.
Thanks, Brian. Great question. Look, it's been an extraordinary year of innovation. I mentioned in my remarks about Circle to Search, Lens, now with video search, approaching over 20 billion queries a month, and obviously AI overviews. And with each of these changes, we are definitely expanding what's possible in search. And it's been really heartening to see users adapt. They understand they can ask more queries, they come back more often, and so, and we have seen growth there. I think we are while we've rolled out AI overviews to over 1 billion users, there is a lot more innovation there we are actively working on. So I expect search to continue to evolve significantly in 2025, both in the search product and in Gemini. And so, I think that's the opportunity ahead. I think we are in early days of what is a powerful new technology, and with it, I think we can do a lot more for our users, but at the same time underpin it on the foundational bedrock of quality and trust and user experience, which we've always done. So we are at 1 billion people. I don't necessarily see a constraint there. Obviously things like latency, cost per query, etc. But as you've seen us over the past 18 months make substantial progress. So we'll continue rolling it out more, and we'll keep evolving it. I think search, if I were to take a 12-month outlook, I think is going to continue to evolve and will be at the forefront of that innovation.
Our next question comes from Doug Anmuth with J.P. Morgan. Your line is now open.
All right, thanks for taking the question. Perhaps for Sundar and Anat, can you talk more about the infrastructure advantages and CapEx efficiencies you've generated from Google's own TPUs, and how does that influence your CapEx spending going forward relative to peers and other leading cloud service providers? Thanks.
Thanks, Doug. I'll take the first part, and Anat can give color on the CapEx spending part. Look, I think we are well positioned because in our AI infrastructure, we have a comprehensive solution set, right? We have all the leading AI accelerators, GPUs, TPUs, as well as CPUs, and we are investing in all of them. We have a wonderful partnership with NVIDIA. We are excited for the GB200s, and we'll be one of the first to provide it at scale. On the TPU front, I think we have not only are we in our 6th generation, I just spent some time with the teams on the roadmap ahead. Couldn't be more excited at the forward-looking roadmap, but all of it allows us to both plan ahead in the future and really drive an optimized architecture for it. And I think because of all this, both we can have best-in-class efficiency, not just for internal at Google, but what we can provide through cloud. And that's reflected in the growth we saw in our AI infrastructure and Gen AI services on top of it. So I'm pretty excited about how we are set up, and we'll continue executing there. And maybe Anat can give comments on the CapEx spending.
Yeah, sure. So let me provide a little more color on our capital investments, and certainly an important area in this time of investments in AI. As you saw in the quarter, we invested $13 billion in CapEx across the company. And as you think about it, it's divided into two categories. One is our technical infrastructure, and that's the majority of that $13 billion. And the other one goes into areas such as facilities, the bets, and other areas across the company. Within TI, we have investments in servers, which includes both TPUs and GPUs. And then the second categories are data centers and networking equipment. This quarter, approximately 60% of that investments in technical infrastructure went towards servers, and about 40% towards data center and networking equipment. And as you think about them, we offer both GPUs and TPUs, both internally and to our customers. So we have choices and options based on what our customer needs and what our internal needs are. And as you think about the next quarter and going into next year, as I've mentioned in my prepared remarks, we will be investing in Q4 at approximately the same level of what we've invested in Q3, approximately $13 billion. And as we think into 2025, we do see an increase coming in 2025, and we will provide more color on that on the Q4 call. Likely not the same percent step up that we saw between 23 and 24, but additional increase.
The one other thing I would add on Doug, on your first part of the question on the TPUs is, if you look at the flash pricing we've been able to deliver externally, I think, and how much more attractive it is compared to other models of that capability, I think probably that gives a good sense of the efficiencies we can generate from our architecture, and we are doing the same that for internal use as well. The models for search, while they keep going up in capability, we've been able to really optimize them for the underlying architecture, and that's where we are seeing a lot of efficiencies as well.
Thank you.
Your next question comes from Eric Sheridan with Goldman Sachs. Your line is now open.
Thank you for taking the questions, and Anat, congrats on the new role and welcome to Alphabet. Sundar, maybe one for you on Waymo. What are the key learnings as Waymo has rolled out to additional cities in terms of consumer adoption of the product and how you think about go-to-market strategies for Waymo? And then maybe one for Philip, in terms of looking at YouTube trends by long-form versus short-form video or shorts, how are you seeing consumption versus monetization trends continue to evolve for YouTube as broken down maybe in that means? Thank you.
Thanks, Eric. On Waymo, obviously, it's been an exciting year, both in the Phoenix market and in San Francisco. We've definitely scaled, and particularly scaled paid rides, and definitely, it's surprised us on the positive in terms of how much consumers are loving the experience from a safety standpoint, privacy standpoint, reliability standpoint, etc. So I think all of that has been on the positive side, and obviously the product will continue to improve. So for us, we are mainly focused on each city as we go. The pace at which we can now do an additional city gets easier. So we are definitely accelerating that way. That's why you've seen us move into LA. We're also, striking partnerships in newer and unique ways, hence the Uber partnership and expansion to Austin and Atlanta. And we have more options where we are looking at the driven by Waymo model with other network partners, fleet managers, etc. So it's an exciting moment, but we are still obviously being safety focused, but are looking to scale and testing out a variety of models, and which will help us plan ahead well for 2025 and beyond.
Yes, and to your question on YouTube Shorts, consumption versus monetization, maybe we start with the watch time. It continues to grow actually across YouTube with particular strength in Shorts and in the living room. Just to give you a number, over 70 billion YouTube Shorts are watched every day. On the monetization side, the monetization rate of Shorts relative to in-stream viewing is continuing to show a healthy rate of growth. The gap continues to narrow, particularly in the US. We also see it in other more highly monetizing markets. And we continue to work very closely with our advertisers. We're committed to providing them with very effective ways to reach the growing audience here. I talked about advertisers now being able to book first position on Shorts blocks. That's exciting. Shorts are also integrated into video reach campaigns, YouTube Select. So you're really giving brands the precise targeting options here. So yeah, we're pleased with the progress we're making here.
Our next question comes from Ross Sandler with Barclays. Your line is now open.
Hey, everybody. Thanks for taking questions. Congrats, Anat. Two, if that's okay. So first, Sundar, given the high stakes around native AI product usage, are there any milestones you can share around where Gemini usage is compared to the 250 million weekly active users that ChatGPT is seeing right now? And then the second question is, I'm sure this is something you guys have been thinking about for a while, but it looks like the way that the Google versus DOJ search trial is going, there's a decent likelihood that the Apple ISA contract and some of the Android pre-install contracts are going to be voided out at some point in the future. So I guess the question is, what plans do we have in place to recapture some of the usage that might be going away in those search access points? How can we gain share on iOS queries if the Safari toolbar access point were to change? Thank you very much.
Thanks, Ross. Look, I think, Obviously, we are serving Gemini across a lot of touch points, including it's now, over 1 billion people are using it in search, accessing. We are getting it across our products. The Gemini app itself has, very strong momentum on user growth. Our API volume, I commented on the Gemini APIs having gone up 14x in the past 6 months. So we are seeing growth across the board, and the Gemini integration into Google Assistant is going super well on Android. The user feedback is positive, so we are continuing to roll that out more. So I think you will see us. We are investing in the next generation of models, and as part of that, we are investing in scaling up the usage of the both directly to the models as well, both on the consumer and the developer side. So I think I'm pleased with the momentum there. On the second, on the legal, trials. Obviously, I don't want to, it's not appropriate for me to speculate, given it's in the middle of ongoing litigation. But what I would say is, stepping back. Look, we've always, and even as the court acknowledged, clearly. We've reached a position of success because we've deeply innovated, and we are continuing to do so. People have chosen us, because they view it as the best product, be it consumers or partners. And we have a long track record of working hard to make sure our products are as easily available to users as possible across all platforms. So, all that approach and all the learnings over the years, I think will all be, will give us a strong foundation. First of all, we plan to vigorously defend, these cases, and some of the early proposals from the DOJ, et cetera, have been far-reaching, and we plan to, I think they could have unintended consequences, particularly to the dynamic tech sector and the American leadership there, and so we plan to engage very vigorously there. Thanks.
Thank you.
Your next question comes from Justin Post with BAML. Your line is now open.
Great, thank you. I wanted to ask a little bit more about AI overviews, maybe two parts. You mentioned you're seeing increasing queries or activity. Could you help us understand that for the billion users who have had access to the product, what you're seeing there? And then on the monetization side, is there a chance that AI overviews would help monetize some of the information queries that maybe you weren't making much monetization from with old formats? Thank you.
Thanks, Justin. Look, I think the main thing I would say is, as we have rolled out, we're obviously now scaling it out. We just rolled it out to 100 new countries and territories, and that's what will get us to 1 billion users. But amongst the users where we had already rolled out, we clearly see strong engagement. It's one of the most positive user satisfaction launches we have done in search, and it is increasing overall search usage. Like, people are asking more complex questions, different types of questions. They are exploring a wider range of websites, and what's particularly exciting is that this growth actually increases over time as people learn to adapt to that new behavior. So, so I'll stick to those comments, and I think, to the second part of your question on the monetization side, I think Philip can answer more there. Philip?
Yeah, so look, the transition here is working well, including for ads. As you know, we recently launched ads within AI overviews on mobile in the US, and this really builds on our previous rollout of ads above and below the AI overviews. So overall, for AI overviews, we see monetization at approximately the same rate, which gives us a really strong base on which we can innovate even more. And specifically to your question of monetizing queries where we can monetization potentially at the moment, yes, I can see that there is an opportunity for that.
Thank you.
Your next question comes from Michael Nathanson with MoffettNathanson. Your line is now open.
Thanks. I have one for Sundar. Sundar, there was this perception, and it may have been false, that Alphabet was not as innovative on AI as they should. And it clearly shows that that was wrong. You're moving pretty quickly, rolling out new products. Can you talk a bit about how you may have changed the org structure? I know you've combined some assets, but talk a bit about how you maybe rethought how you go to market with some of your innovation products, and maybe what's changed operationally as AI has picked up steam for you guys.
Thanks, Michael. Look, I definitely think it's an extraordinary opportunity, and I think the company, given the important moment, we had to gear up to build models from scratch that could be productionized at scale, on our architecture, and that's what the Gemini era was about. So there was a fixed cost of getting it all set up and getting the Gemini era underway. But now I think we are in much more of a virtuous cycle with a lot of velocity in the underlying models. We've had 2 generations of Gemini model. We are working on the third generation, which is progressing well. And teams internally are now set up much better to consume the underlying model innovation and translate that into innovation within their products. So now, all the 7 products which have 2 billion users each have done their first versions of incorporating Gemini, and there is aggressive roadmap ahead for 2025. I mentioned earlier search alone. I think there's a lot more we can do, and we are also enabling smaller teams to ship newer experiences. And Notebook LM was the first instantiation of those types of efforts as well. Through it all, we had to do this when the company evolved from desktop to mobile. We are restructuring the company. Effectively, if you think of Google as a neural network, we are forming new synapses, which work much better to adapt to this moment. And I think that sets us up well for the year ahead. And we are bringing all of this innovation to the outside world through cloud as well. And so we are going to do that. And so that's an additional opportunity at this moment.
Thanks, Sundar.
Our next question comes from Mark Mahaney with Evercore. Your line is now open.
Okay, I'd like to ask 2 questions, please, to Anat. First, the margins at cloud have really started to ramp nicely. There are comps in the industry with still materially higher operating margins. I imagine that's a matter of scale and trying to catch up from a third place position. But how do you think about the margin trends that you're seeing, and what's your level of confidence that those margins can kind of match up to other industry players that are doing closer to 30% margins? And then secondly, just across the board, when you think about the business that's running at 32% operating margins this last quarter, and you come in looking at this fresh, is it clear to you that there are a lot of kind of newfound cost efficiencies or ongoing cost efficiencies? Like, what do you see as the biggest opportunities to kind of take those margins and maybe over time take them materially higher? Thank you very much.
Thanks, Mark, for both of these questions. Let me start on the cloud margin. So certainly very pleased to see not just the top line growth rate, but the margin expansion to 17%. Really outstanding work by our cloud team to drive continued benefit to customers. And as you think about that margin expansion, really it's a few things. You've mentioned one of them. The first is scale. Obviously, as we scale the business, we have more opportunity for margin expansion. But the second, and shouldn't be underestimated, is the work the team has done to drive efficiencies across the cloud business. And we're seeing those come through, whether it was through headcount management or facilities management, other process efficiencies. We're seeing that go to the bottom line and driving the results you're seeing this quarter. Hard to obviously compare to any of our peers or competitors. It's a different business, but more to come. Now, the one thing to remember, and I've mentioned this in my prepared remark, this is an area that requires investment. And a lot of this investments, you think about servers, et cetera, is based on demand we're seeing from customers. So this will translate to revenue in the fairly short term. But that means there are headwinds associated with the annual run rate or costs associated with these investments, whether it's in the form of depreciation or just construction costs that are not capitalized, et cetera. So we'll continue to drive efficiency in the business to try and offset some of these. But this is how I'm thinking about the dynamics for cloud. Overall, for the business, this is one of my key priorities, is to look across the organization to see what we can do in terms of driving further efficiencies. There's really good work that was done, started by Ruth, Sundar, and the rest of the lead team to re-engineer the cost base. But I think any organization can always push a little further. And I'll be looking at additional opportunities really across all the elements that I've mentioned on my prepared remarks. Think not just about the size of the organization, but mostly how we operate and how we run the business. And I think when you simplify the organization, Sundar just made a few comments on that. And when we use AI within our own processes and how we get work done, there are some efficiencies or opportunities for efficiencies. Now, all of that will go against substantial increases in capital investment, and I've mentioned going into 2025. And again, I'll give more color when we are on the Q4 call. So hopefully we'll be able to drive efficiencies to work towards offsetting some or all of that increase.
Thank you very much.
Our next question comes from Ken Guralski with Wells Fargo. Your line is now open.
Thank you so much, too, if I may. First, just on search, why does it make sense to have why doesn't it make sense to have two completely different search experiences? One, an agent-like answers engine, and then two, a links-based, more traditional search engine. You could innovate on both and let the consumer decide. Maybe think of it as the ultimate A/B test. So I'd be curious to get your thoughts there. And then the second, if you could touch a little bit on the consumer environment in 4Q. Perhaps nobody has a better view into the health of the consumer in multiple verticals. If you could talk a little bit about, you talked about tougher comps on the Asia e-commerce side, but any other trends you could point out, be around the election or fewer holiday days this year, that would be really helpful. Thank you.
And why don't I take the first part, and then Philip can give color on the consumer vertical trends. On the first part, look, in this moment, people are using a lot of buzzwords like answer engines and all that stuff. I mean, Google started answering questions about 10 years ago in our search product with featured snippets. So, look, I think ultimately you are serving users. User expectations are constantly evolving. And we work hard to stay a step ahead, anticipate and stay a step ahead. And this is why, we've kind of really brought multimodality on the input side and the output side in search pretty natively. And so, we'll continue expanding, innovations there. I do think having two surfaces for us allows us to experiment more, and there are, I view this moment as a moment in which there are new use cases which we will be able to do, which we couldn't have done before. And so having the flexibility, having product surfaces where we can move very, very fast, I think is actually helpful. And so we are embracing it and going to lean into this moment like we have done in the past year. And I think that'll play out well for users. Philip?
Yes, on the vertical trends, look, I called out search and other revenues being led by growth in the financial services due to improved economics in the insurance industry, followed by retail. But I think it's fair to say in general, we saw broad-based strength across all verticals, maybe specifically to election-related ad spend. We had a slight tailwind from election-related ad spend in the third quarter, which was a little bit more pronounced in YouTube ads.
And our last question comes from Stephen Ju with UBS. Your line is now open.
Okay, thank you so much. So, hi, Sundar. I think in two separate blog posts from Google Cloud talking about the real-life use cases for Gen AI, I think you highlighted what was a pretty material increase in a number of companies that are starting to turn their, ideas into products. I think it was like a 80% increase in a 6-month period. And I think you guys also published some survey data saying that your customers are generating tangible ROI there. So
can you update us on what you're seeing in terms of sales cycles, perhaps accelerating, and, how much of the heavy lifting the cloud team may have to do to help your customers turn those ideas into reality more quickly? And Philip, I think one of the feedbacks that we're getting from advertisers is that while the initial use case for PMax for them was in search, they're starting to use it more and more for mid and upper funnel campaigns and budgets as well. So can you talk about whether that's an anecdote or something that you're already seeing perpetuate among all of your advertisers? Thank you.
On the cloud side, look, I think, on the cloud side, look, I do think you hinted in your question itself. Definitely customers are leaning in this moment. Wherever we have been working, we are definitely seeing real concrete proof points delivering real impact, right? And be it in their user experience, be it in the bottom line, etc. And so I gave a few examples on my remarks, and I think customers are getting savvier. We ourselves are going through a lot of learnings, both in deploying this within Google as an enterprise and bringing those learnings to our customers outside. And as we see common patterns across the breadth of sectors we serve in, I think we're bringing those learnings. So I would say, if anything, I think over time, I think organizations are beginning to understand more. They are leaning in. Our models are getting better. We are building more comprehensive solutions on top of it. So I think we are well set up for 2025, and I think there will be continued momentum in this area.
And on the PMax side, look, we continue to see success with PMax, and we see those success stories really from large advertisers, from agencies, from SMBs, across marketing objectives, across different verticals. It's a very cost-effective, and it really finds customers wherever they are across all the different Google channels. And with the introduction of Gemini, we added a lot new features to PMax. For example, to deliver more powerful performance, help advertisers scale, build high-quality creative assets, and so on. But going directly to your question on the funnel, also keep in mind we have a great product with Demand Gen that is all about inspiring consumers beyond the initial awareness and to take action. And we think Demand Gen is actually a very powerful tool to win in today's marketplace with marketers. And we can't wait to see actually what more value it will drive.
Thank you.
Thank you, and that concludes our question and answer session for today. I'd like to turn the conference back over to Jim Friedland for any further remarks.
Thanks, everyone, for joining us today. We look forward to speaking with you again on our fourth quarter 2024 call. Thank you, and have a good evening.
Supply chain.
Thank you, everyone.
Now talking about $5+ billion. How do we think about what you've been doing on the supply side, given the lead times, the production cycles of these MI 300 and 325 GPUs as we look out into 2025? And I have another quick one.
Sure, Aaron. So look, I've been very happy with how our supply chain has ramped over the last number of quarters. It's clearly a tight supply environment, but we've done a great job getting ensuring that we have capacity across the entire supply chain. Again, that was part of the reason for the higher revenue in the third quarter around our Instinct business, just both customer demand as well as supply chain improvement. And going into the next few quarters, going into 2025, I think we expect that the environment will continue to be tight, but we've also planned for significant growth going into 2025. And so we feel good about our overall supply chain capability.
Yeah. And then as a quick follow-up, when I look at the sequential guidance in revenue at the midpoint, let's call it about $680 million up sequentially, could you help us frame of how much of that is driven by client versus the data center piece of the business? Thank you.
Sure, Aaron. So certainly if you look at the sequential guide, the largest contributor is the data center business. And that is now such a large piece of our business. It's over 50% of our business in Q3, and it will continue to grow in Q4. Client segment, we also expect to perform well. I think we've done very well with our launches this year, both on the desktop, Zen 5 launches, as well as the notebook AI PC launches. So we expect growth there. And then the other segments on a sequential basis, gaming and embedded would be more modest.
And the next question comes from the line of Ross Seymour with Deutsche Bank. Please proceed with your question.
Hi, guys. Thanks for letting me ask a question. And Lisa, congrats on the 10-year anniversary. Jean, when you gave the segment guidance, kind of playing off the last question, you didn't mention embedded as being up. And then, Lisa, you just talked about it being up less. I'm just curious, I know it's a kind of a muted recovery, but what's happening in the embedded business implied in your fourth quarter guidance, and how are you thinking about 2025 just directionally?
Sure, Ross. Let me start, and then maybe Jean can add. Look, we've seen some improvement in the embedded business. You saw some improvement in the sequential in Q3. We expect some modest improvement in Q4. What we're seeing is really a mix across the different subsegments in embedded. There are some segments that are stronger. So our test and emulation business actually did very well. We're ramping our new Versal platform there. Aerospace and defense did well, also continues to be relatively strong. Communications has not seen much recovery, so I would say that that's still fairly muted, and industrial is also a little bit on the softer side. So between all of those, we expect a little bit of growth into Q4, and let's call it a modest growth in 2025, but we're planning for it to be a little bit mixed amongst the segments. Maybe Jean, if you want to add.
Oh, I think you covered.
Okay.
Great. And I guess for my follow-up, just on the EPYC business, you've done incredibly well there, Lisa. Have you seen any kind of loosening up of the crowding out effect with well, in your case, the Instinct side taking demand away from the EPYC side? Doesn't seem to have slowed you down much this year. You're still up by my math, maybe 33% or so. And how are you thinking about that kind of CPU versus GPU dynamic from a customer spend perspective as we look into 25?
Yeah, sure. Let me talk a little bit about the data center CPU business. Look, we've been extremely pleased with the progress there. I think the market environment has certainly gotten better over the last couple of quarters. We've seen some of the large cloud customers now sort of adding to their data center capacity and refreshes. We've seen enterprises also start with some of their modernization activities. Within that sort of market environment, our product portfolio has done extremely well. So here in the third quarter, the Zen 4 portfolio between Genoa and Bergamo was very strong. We saw the beginning ramp of our Zen 5 Turin capabilities, and then we also actually saw pretty good demand even on Zen 3 or our Milan family, just given the performance price ratios there. So overall, we have a very strong top to bottom stack, and we do see some strength in the overall server market, which adds to some of the AI opportunity that we have.
And the next question comes from the line of Ben Reitzes with Melius Research. Please proceed with your question.
Yeah, if I could stick to the pattern of two, I want to follow up a little bit on servers, and thanks for the question. Going into next year, it seems like you're poised for more share gains, and I was just wondering, there is a perception, that GPUs are cannibalizing, the servers, but what are you seeing specifically in Turin? Is it with this momentum that you're talking about? Is it the right CPU for a GPU? Are hyperscalers in particular liking the fact you can consolidate and create more room for AI gear? What is the particular catalyst and what that you're seeing out there with this upgrade? Thanks.
Sure, Ben. So I think when I look at Turin and the environment going into 2025, Turin is actually very well optimized for sort of the broad set of server workloads or traditional CPU workloads, including both scale up and scale out workloads. So I think that is very positive. We believe that there will be strong AI content on CPUs, and that helps Turin as well. It's also an important piece of the head node of any GPU configuration. So overall, I think those are all good catalysts for us. And primarily, we're at this point where we're expanding the workloads in general as we are working with our largest cloud customers, and we're making strong progress in enterprise, which has been very important for us. The enterprise sale takes longer. There's a significant amount of POC work and just making sure that CIOs are familiar with our offerings. But I think between our Zen 4, Zen 5 offerings now, we really have a very broad portfolio that satisfies the vast majority of the traditional CPU workloads.
Okay, thanks. And then I just want to follow up on the PC market. There's just, you guys keep outperforming, but there's just general concerns that of consumer weakness. And I was just wondering, what you're seeing in the 4Q, and is there a risk of more than seasonal decline in the 1Q, or do you feel like things will keep going unabated in the PC market for you guys particularly?
Well, we see a few things in the PC market. So our business tends to be more consumer weighted. So the second half of the year is usually stronger than the first half of the year. And this year, that's added to the fact that we have a couple of product launches. So we launched our desktop products with Zen 5 and our Ryzen 9000 series, and we also launched our AI PC next generation Ryzen AI 300 product. So I think the combination of those two have given us, let's call it, a stronger than normal second half of the year. I would expect there will be seasonality going into the first half. That's typical in our business. I think the main point is, this is the strongest PC portfolio we've had, sort of in our history, I think, across desktop and notebook. And as we go into 2025, I think there's generally some optimism about the PC market, let's call it maybe growing mid-single digits, and within that, we have the AI PC, catalyst, as well as, some of the Windows 10 sort of end of support, coming in 2025 as catalysts. So I think we feel good about, the PC market in 2025, but we would expect some level of seasonality going into the first half of the year.
And the next question comes from the line of Joshua Buchalter with TD Cowen and Company. Please proceed with your question.
Hey guys, thanks for taking my question. I'll keep it to one since I'm new here. On the data center GPU side, I realize everyone wants new customer announcements and 2025 guidance, but we're not going to get that, certainly not today. That said, maybe you could speak to how much of a runway you think exists at existing customers, and how much of a catalyst MI325X on CDNA 3 and then MI355 on the new architecture can be to growing revenue and workload breadth internally and externally at these existing customers as we think about growth into next year at the data center GPU side. Thank you.
Yeah, sure, Joshua. Thanks for the question. So, look, maybe let me start again with this notion of we're very pleased with the progress that we've made in the data center GPU business. I mean, if you think about when we started the year, we were just launching MI300. We had talked about perhaps $2 billion of revenue in 2024, and as we've gone through the last few quarters, what we've done is we've successfully completed a number of customer milestones, and those customer milestones include things like ensuring that we are, at scale in data centers, meeting all of the reliability requirements and so on and so forth, as well as optimizing on specific workloads and ensuring that we have very, very performant, out of the box performance. So I think we have, gained a lot of confidence over the last couple of quarters, just seeing how the customers have ramped. I know everyone would like it to go faster. We think it's actually going really well. And being able to talk about exceeding $5 billion of revenue in 2024, I think we feel really good about that. Going into 2025, we feel great about the market. The market continues to be the place where there's a significant CapEx investments. We feel great about our product portfolio. It is getting stronger with everything that we've learned off of the MI300 ramp. And then in particular on the software side, We have greatly increased our customer support, customer engagements, out-of-box performance, open source ecosystem, all of those components that are necessary to ensure that customers can run, at scale, at performance, at a great, TCO. So all of those, together, I think we have a good opportunity to grow at our current customers with the number of workloads. You heard Meta talking at our event about expanding from inference on their large language models with Llama 3.1 to some training workloads. Microsoft has also been a very, very great partner with that. And then you should assume that we're working with all of the large customers out there, and many of them are very deep engagements with us to continue to optimize their software to our hardware. So those are the opportunities in front of us.
Thank you, and congrats on an amazing decade at AMD.
Thank you.
And the next question comes from the line of Timothy Arcuri with UBS. Please proceed with your question.
Hi, thanks. I had a quick one and then a more extensive question. So the first one is I wanted to ask about the September actuals for data center GPU. It seems like it was in the $1.5 billion range, and that would put December in kind of the $2 billion range. Is that about right?
So that's a pretty granular question, Timothy, but maybe let me help you with this. We actually did better in the data center GPU business relative to our initial expectations. So you would imagine that the business was actually greater than $1.5 billion. I mean, we're actually seeing now our GPU business really approaching the scale of our CPU business.
Great. And then just kind of more broadly on the shape of next year. I mean, you seeded the market with these big customers. How do you see the shape of revenue off of that CQ4 number? Can you continue to grow off that level, or do you see some risk maybe of a pause next year? And I ask because MI355 is dropping into the existing infrastructure, and I think you did say you'll have a liquid-cooled option, but you do hear about some customers wanting rack scale. So I wonder if you worry a bit about there could be a pause before you get to rack scale in 2026. Thanks.
Yeah, I guess I would put it like this. I mean, look, this business is, there's a lot of activity going on, and we're spending time with customers as they're building out their data centers. Some preferred, air-cooled environments, liquid-cooled environments. Some want rack scale. Some are perfectly happy to go into their existing data center infrastructure. So there are lots of different variants. What I would say about 2025 is we feel, very good about the growth opportunities. I would say that, it might be lumpy. In general, these are, large customer acquisitions, and it's not always predictable exactly which quarters you would expect the significant build out. But I think overall we feel good about the trajectory into 2025. I don't know if that's helpful.
And the next question comes from the line of Joe Moore with Morgan Stanley. Please proceed with your question.
Great, thank you. I wonder if you could talk about the $5 billion of AI revenue, how that breaks down between training and inference, if you're able to assess that. And just, I know you sort of started off with most of the traction in inference, but you've seen some traction on the training side. Can you just talk about what that split looks like going forward as well?
Sure, Joe. So certainly from the $5 billion that we're talking about, the early traction has been primarily with inference, just given the strength of the product portfolio. MI300 is like very, very well optimized for inference, given the memory capacity and memory bandwidth capabilities. But we have had some training adoption, and we expect that will continue to grow as we go through the next few quarters. And so, as we let's call it fast forward a year, I would say we would have a fairly balanced portfolio between training and inference.
Great, thank you.
And the next question comes from the line of Vivek Arya with Bank of America Securities. Please proceed with your question.
Thanks for taking my questions. I had two. So, Lisa, for the first one, how do you address this investor argument that MI is off to a great start, but spec-wise remains kind of 1 year behind the industry leader, right? You're shipping something comparable to Hopper while they're starting to ship Blackwell next year. When you are at MI350, they will be on Blackwell Ultra or Rubin. So how do you see AMD closing that gap, and can you really gain share until that gap is closed?
Yeah. In fact, I actually don't see that. So, maybe let me state it in another way. I think MI300, when we launched it, was behind, H100. H100 was in the market for a much longer time. We have, with our accelerated roadmap, actually, closed a good part of that gap. I think MI325 is a great product. It's going to compete very well with H200, and the MI350 series will compete very well with Blackwell. In the overarching view of the world, frankly, the market continues to be constrained. Particularly in the newer, product, generations. It takes a long time to go from, let's call it, shipping your first samples to actually ramping in, volume, production workloads. And I think one of the advantages that we have with our portfolio is that from a data center, retrofit standpoint, it's actually a much easier ramp, just the infrastructure is the same. So look, there are lots of opportunities, across the set of AI workloads. We think this roadmap is actually strengthening over time, and that's the feedback that we're getting from our customers.
And for my follow-up, Lisa, back to the question on the PC market. So it was up, or the client was up 26% sequentially. I think you're guiding to some growth in Q4 as well. How do you see the state of the channel? And I ask that just because, sell-through in Q3 was not that great, and I think Intel had guided down their Q3 to be flat or down. So just how much of the growth that you are seeing is because of ASPs? How much of this is units? And as you look out to 2025, do you think the ASP strength that we have seen this year, can that mix benefit continue for you in 25 also?
Yeah, Vivek, the way I would say it is our client business has a few factors that may be slightly different from the overall market. So, let me start with our desktop channel. I think our share is very high in the desktop channel, and we've done very well there. So we saw strength across that portfolio in Q3. We actually saw some of our highest sell-through, so it was a strong sell-through quarter, and obviously it shows in the revenue results. I think on the notebook standpoint, our business tends to be more heavily consumer weighted, and so that is more of a second half story. There is good momentum around AI PCs. I mean, we've looked at some of the activation rates of our newest Ryzen AI 300 processors, and the activation rates are good. It's still very early in the AI PC cycle, but we are seeing some good momentum there. So I think we'll see both units up, and the ASPs will depend a little bit on the mix between consumer and enterprise and desktop and notebooks. But my earlier comment about the client segment, I think it is an opportunity for us. We are underrepresented in the client segment, and we see an opportunity to grow both in consumer as well as enterprise.
And the next question comes from the line of Harlan Sur with JP Morgan. Please proceed with your question.
Good afternoon. Thanks for taking my question. Lisa, on your core EPYC business, you did start to see recovery in enterprise last quarter. It was broad-based across many verticals. You've also got a growing share dynamic as well, right? And it sounds like that trend continued in the September quarter. Do you anticipate continued follow-through in terms of quarter-on-quarter growth this quarter for enterprise? And then maybe what sort of enterprise and general cloud demand trends are you seeing out of China?
Sure. So Harlan, thanks for the question. We did see positive growth momentum here in the third quarter in enterprise. We are getting broader adoption, and we're seeing that growth both in on-prem deployments as well as cloud third-party deployments. And so we're very happy with sort of the adoption of our cloud instances. When people are doing migrations, they're migrating from on-prem to cloud, they're migrating to AMD, or they're migrating from older cloud instances to newer cloud instances. We're seeing migrations to AMD, so I think that helps us in both the enterprise segment as well as the cloud segment. As we go forward into the fourth quarter, I think we are expecting another quarter of growth on a sequential basis for our server business and strength in both enterprise and cloud. And I think as we think about our opportunities going forward, the enterprise business is a place where we have been underrepresented. I think our portfolio has strengthened, so the platforms that are being offered by the OEMs have broadened with not just Zen 4, but also with the Zen 5 Zen 5 portfolio launch, and so I think those are opportunities for us in 2025.
Yeah, on your China question, we are underrepresented in China market in the server CPU side. So as Lisa said, that's another opportunity for us to continue to gain share.
Perfect. Thank you.
And the next question comes to the line of Stacy Rasgon with Bernstein Research. Please proceed with your question.
Hi, guys. Thanks for taking my question. For the first one, I wanted to go back to what you said about the size of the data center GPUs in the quarter. You said it was approaching the size of your compute business, which would put it around what? I don't know, 1.7 billion, maybe a little more. And number one, is that right? And if that is right, it implies that at 5 billion for the year, you'd actually be down in Q4. So I'd probably got to be 5.2 or 5.3 billion for the full year just to be flat sequentially, and more than that to get growth. So I guess the question, number one, is that the size of the business that you're talking about in Q3, and is that the kind of level of growth you're thinking into Q4? How should I be thinking about that?
Right, Stacy. So first, a couple of things. You have to remember that in our data center segment, we have some other revenue that is not CPUs and GPUs, right? We have some FPGAs and other things. But the question earlier was, was the revenue 1.5? And I said that it was greater than 1.5. So, take that as a fundamental. And then as we talked about, we didn't guide an exact number for the data center GPU. We said exceed 5 billion. And so you should assume that it exceeds 5 billion.
Okay, thanks. For my follow-up, you talked a little bit about lumpiness next year. Is there any kind of seasonality or something that I ought to be thinking about specifically into Q1 for data center GPU? I know you have the MI300, I guess, ramping into production at that point, but should I be thinking about a seasonality into Q1 given the general statement on lumpiness?
I wasn't implying something about seasonality of the data center GPU business. I was implying more that, if you think about the evolution of the business, it depends quite a bit on, a specific number of customers. So these are large customers that drive deployments. Like, for example, the third quarter was a bit higher than we expected. That was driven by some additional customer demand, and we may see that type of lumpiness. So that was what I was implying. And we'll have to see how things evolve as we get into 2025.
We have time for two more questions. The next question comes from the line of Harsh Kumar with Piper Sandler. Please proceed with your question.
Yeah, hey, Lisa. First of all, congratulations on your 10-year anniversary. I just looked at the 10-year chart. The stock is around $3, so heck of a job here. And also, congratulations on $5 billion in Instinct revenues. So I wanted to ask the first question. This is one we get from investors all the time. In the coming year, let's say 2025, your key competitor will take most of the TAM of the AI market, the GPU market. Rough count, they'll take in something like 50-60 billion. You'll get another 5 to 10 billion, call it. So the question is, what do you think is the major hindrance? You've got chip-level compatibility, so does it boil down to the fact that you're just earlier in the game, you've been doing this just 12 months in a serious manner, or is there still a rack-level disparity? If you could just help us think about what the hindrances are to you becoming a major player here.
Yeah, sure, Harsh. Thanks for the question and for the comments. Maybe let me say, I view them as opportunities. If you remember, Harsh, and I think you do, our EPYC ramp, from Zen 1, Zen 2, Zen 3, Zen 4, we had extremely good product even back in the Rome days, but it does take time to ensure that there is trust built, there is familiarity with the product set. There are some differences, although we're both GPUs. There are some differences, obviously, in the software environment, and people want to get comfortable with the workload ramp. So from a ramp standpoint, I'm actually very positive on the ramp rate. It's the fastest product ramp that I've seen, overall. And, my view is, this is a multi-generational journey. We've always said that. We feel very good about the progress. I think, next year is going to be about, expanding both customer set as well as workload. And as we get into the MI400 series, we think it's an exceptional product. So all in all, the ramp is going well, and, we will continue to, earn and, earn the trust and the partnership of these large customers. What I will say is customers are very, very open to AMD. And we see that everywhere we go. Everyone is giving us a very fair shot at earning their business, and that's what we intend to do.
Very helpful. Lisa, for my follow-up, and maybe Jean can help out here, it's kind of well understood that your gross margin for MI300, 325 will be below corporate margins. Could you help us maybe think of some framework on how those gross margins for Instinct might get to parity with your corporate business? I know you probably won't give us a revenue level or a time frame, but maybe you could help us frame in some manner that we could try and understand it.
Yeah, we are very pleased with our overall revenue ramp of our data center GPU business, and our team not only support the revenue ramp and continue to improve the gross margin. Overall, it's below corporate average, and when you think about it, going into next year, of course, our top priority right now is really focus on to address customer demand and provide the TCO benefit, really increase significantly our market presence and drive substantial revenue growth. On the gross margin side, once we continue to ramp the revenue, we do think we'll have the opportunity to continue to improve gross margin. When you think about it, this is a data center business. In the longer term, it tends to be better than corporate average. We'll take some time to get there, but when you look at our data center segment performance, we more than doubled the revenue year over year, but we tripled the operating income year over year. So I think that's how we are thinking about it, is really to drive the long-term growth and get market presence at the same time drive gross margin up.
And our final question comes from the line of Thomas O'Malley with Barclays. Please proceed with your question.
Hey guys, thanks for letting me on. I really appreciate it. Lisa, I just wanted to ask on mix and the MI300 platform into Q4. Obviously, you're launching the 325 series. Should we expect a significant contribution of the new product in Q4, or is this a situation in which it's launching late in the year and most of the impact is into Q1? I guess that's the first one. And then the second one is just, if you look into next year, could you talk about where the end markets are and embedded for Xilinx? You gave some color on comm and a little on industrial there, but just where we're at in terms of starting kind of Q4 and into Q1. Are there any that are outperforming, underperforming? Any color there would be helpful. And thanks for sneaking me in.
Yeah, absolutely, Tom. So back to your first question in terms of the mix in Q4, we would expect the majority of the mix will still be on MI300. MI325 is going into production late in the quarter, and it will be more of a first quarter ramp. So that's that question. And then in terms of the embedded business going to 2025, I would say that the trends that we see are similar to what I mentioned for the Q3, Q4 timing. We do expect that where some of the markets will recover. We're expecting that it'll be a gradual recovery. So we see that, and the strength that we see is in some of the test and emulation segment. We see some strength, certainly in aerospace and defense. There was a little bit of recovery in automotive that we started to see. We're still waiting for comms and industrial. So we'll get more visibility on that as we go through sort of the end of this year. But that's what we see currently.
Thanks, Lisa.
And at this time, we have reached the end of the question and answer session. And now I'd like to turn the floor back over to Mitch Hawes for any closing comments.
That concludes today's call. Thanks to all of you for joining us today.
Thank you. That does conclude today's teleconference. We thank you for your participation. You may disconnect your lines at this time.
Okay, a little over 2 hours here, 2:20. Google earnings were obviously very, very solid. Guidance increase, significant expansion, of course, a little bit on Waymo's as well. And Advanced Micro Devices down about 8%, but, we obviously only caught like the last few bits of the earnings call, like the back half of the earnings call. But I'm going to listen in the entire call. The results overall, I think, were pretty good. I think it might have just been the guidance cut. Not really a cut, but missing expectations. 7.5 billion reported versus 7.7 billion expectations. A little bit of a softer launch for some of their new products that are coming out. So down about 8%, but I really don't think that AMD is deserving of this sell-off. It's actually coming down to my light buy target. So we'll see. I'm planning on selling some puts here on AMD. Maybe a couple puts or maybe one put going into next week or so. We'll see what kind of premiums look like, but I'm really interested in this green rectangle here in the 120s, 130s area, where AMD has kind of gone through the cycles of downtrend. This was, of course, the part of the 2022 sell-off over here in 2023 for a few months, and right now we're witnessing a 2024 sell-off right now. So, it's very normal for AMD to kind of go through these cycles of lower highs and lower lows, but, as mentioned on the call here, Lisa Su is seriously one heck of a CEO, took over in 2014, when the stock was trading at a couple bucks a share, and since then it's up over 6,500%. So very, very, very strong move to the upside. So those are going to be some levels to watch. So thank you so much for joining, everyone. Again, hope you all enjoyed it. Google and AMD were the earnings calls that we covered, but overall we did pretty much break down all of the earnings reported. So again, thank you so much for joining. My shopping list is now also available on the platform. So this right here is a brand new tab, which you can access as a member, and you'll be able to get a list of 30 stocks, in my opinion, that are the highest quality companies in the market right now, with my technical support levels, light buys, heavy buys, and our fair values as well, and no-brainer buy target. So everything's going to be available with the link down below. Thank you so much for joining. Happy investing. I'll see you all in the next live stream.